Welcome to another episode of Absolute Trust Talk Live. I'm Madison Gunn. I am your host this episode, and I have with me Heather Hamilton from Fiduciary Accounting Services. There are quite a few estate planning situations where a complete probate code compliant accounting is required by anyone managing assets for others. This may include a trust administration upon incapacity, which is a new law in California, and death. It covers probates, conservatorships, guardianships, special needs, trusts, etc. All these things require ongoing accounting to beneficiaries. And the cornerstone of these scenarios and their most arduous task is the accounting. The individuals serving in these roles, trustee, administrator, executor, conservator, guardian, right, all names that we throw around all the time that more or less mean the same thing, are all required to produce accountings to the court, beneficiaries, heirs, or all of the above, and additional individuals according to the specific documents themselves, whatever you're doing. And the purpose of an accounting is twofold: to show beneficiaries what assets exist, how they've been handled, and how much is left to be divided up, and to show that the individual with control, typically our client or Heather's client, over the money is doing their job properly. They're not pocketing that money. They're not misappropriating any funds. You got to prove that to everybody. So the accounting aspect of incapacity and after death situations is complex, and it varies depending on the nature of the assets, how long the accounting period is. Typically, it's an annual accounting, but sometimes, as we know, they go a lot longer because someone didn't know they were supposed to do that. So today we have Heather Hamilton, founder of Fiduciary Accounting Services, LLC, also known as FAS, as our guest. Heather founded FAS with the understanding that many attorneys, accountants, and bookkeepers do not have the time, resources, or expertise to prepare a thorough and accurate accounting in accordance with the California Probate Code. Today, Heather is recognized as one of the most skilled practitioners of fiduciary accounting in California. Normally, I would sit here and read Heather's bio, but I think I'll let her explain how the heck she got into preparing accountings for a living. So for everybody listening live, please throw your questions in the chat or on whatever platform you're watching, and we will get to those at the end. But first, it's my question. So Heather, how did you get into preparing accounting as a career?
Well, good morning, and thanks for having me. I really started doing fiduciary accounting because I wanted to see my daughter when she was awake. When my daughter was young, I was working as a commercial banker and was in Palo Alto for breakfast and San Francisco for dinner and was never home and thought, I need to find something else to do. At the same time, my mother was just retiring from managing the Oakland trust department for Mechanics Bank and was doing a little fiduciary accounting on the side. So she taught me how to do fiduciary accounting, how to read the probate code, how to really make it happen. And I spent 6 months taking an entrepreneurship class at Cal. And once I got my first client, I quit my banking job. So after 17 years of preparing fiduciary accountings and teaching others how to do it, it's now a career.
That's great. You're ahead of the times in regards to being able to work from home and having that work-life balance
That's right.
That COVID forced us all into. That's awesome. What is the most challenging aspect of preparing accountings for you?
Really, the most challenging part is getting the story. Every accounting is telling a story. It's telling the story through numbers. So getting to meet with clients, talk about the situation that they're in, why they need the accounting, whether it's because somebody is incapacitated or because somebody has passed away or because they're being sued. All of these things are really critical to understanding what the accounting is going to look like, right? The process of the accounting is fairly standard, but the story is really what we're trying to communicate through the numbers. So, for example, if we have a situation in which a trust was supposed to be divided into a bypass trust and a survivor's trust, the survivor might have access to the income generated from the bypass trust. But if those things were never separated into two separate trusts, if the assets were never divided, our role is really to go in and figure out how to report, not only in accordance with the probate code, but how to report that story such that it's determined what belongs to the survivor trust, what belongs to the bypass trust. And obviously there are more egregious examples,
Sure.
people who, all the misdeeds and mistrust and, using a trust as their personal ATM, as you can imagine, as I'm sure you've seen.
Yes. Yes, it's always that's where your stories become a little bit of creative fiction, to make sure that it still looks okay and that you're like undoing what your client did.
That's right. But the numbers don't lie, right? So
Right.
if we do run into a situation where we realize the client is, maybe made a few mistakes along the way, we're pretty straightforward and consider it an opportunity to have a conversation with their counsel.
Yeah, and no one's throwing anybody under the bus if we find things like
Not
that.
at all. Not at all.
Yeah. What is the most challenging thing for your client?
For our clients, I would say the hardest part is gathering the information, right? So in preparing a fiduciary accounting, we have to report every transaction that happens within the trust, estate, or conservatorship. And to do that, we have to have every bank statement's brokerage statement, closing escrow statement. It becomes a lot of information. Unlike giving a few specific pieces of or a few specific documents to your CPA to prepare a tax return, we need everything. And so both helping the client understand that is step one, and step two is helping them gather that information. And you can imagine when we have a client who has, a very long accounting, you can almost hear the beep beep of the truck back up to our office with everything from their garage, right? As they've tried to maintain all these records. But gathering the information is the hardest part for the client.
Yeah, I always like to say we now have to put, when we request that, we need every page of the statement.
Right.
Because it might look like some innocuous thing on a brokerage statement, but it's actually a transaction or something that we need to know. So I get that.
And I'm sure, we have clients who give us, they'll give us an annual statement, and unfortunately that doesn't show every transaction, or they will have every statement that's available when they log in online, but they don't have all the information that goes back, 3 years, 5 years. And the banks and the brokerage firms, they generally keep 5 to 7 years. I believe they're supposed to keep 7 years of information. But getting access to that sometimes takes additional time.
Oh, good. I was going to follow up with if you knew that. I was like, I didn't ask that in advance, but I wasn't sure. I was like, do they have requirements for how long they have to keep records? So if you've been a Bank of America client for 20 years, you can't even get your first statement, probably. They probably purged that. Yeah.
Right.
Oh,
you can get, you can get the last 7 years. You should be able to get the last 7 years. But and gathering the information includes every check or a check register or something that provides the payee and purpose of every transaction.
Right.
It's not just the bank statement itself.
Yeah, we don't know why you wrote a $500 check to Jane Doe,
right.
Who that is, what it's for. Yeah, you have to get all the detail.
Yeah.
And the check may not tell you that. So you have to keep records on top of the financial records. Exactly. So speaking of getting things from your clients and what's challenging for them, who are your clients and what does a typical client look like for you?
Yeah. Our clients include trust and estate attorneys, people who do trust administration, as well as litigators. We have clients who are financial institutions, professional fiduciaries, and of course, a lot of attorneys refer their individual trustee conservator clients to us. So they become our clients. there's really no typical client, I would say. Everything we do is in accordance with the probate code. So we don't take on any divorce cases. And so we often get that question, will you do this divorce issue? But we don't do that. We don't do any forensic accounting for businesses. So those are completely separate functions. We stick to clients who need reporting for the court, for litigation, and are only in probate court.
Right. You're only showing what happened. You're not saying who gets what or anything of that nature. Yeah.
Correct.
Is this community or separate property, or did someone, when did this business, all of that, those forensics where you're looking for little things or looking for misdeeds. So
yes,
I imagine that's a lot different.
Yeah, we're just reporting the facts. That is and that's the purpose of the fiduciary accounting, is to give everybody in the case a clear outline, a very plain document that says, here's everything that came in, here's everything that went out.
Yep. Yeah, it's not that exciting. I mean, it can be exciting, but it's not. I mean, people assume that it's more exciting than it's not. Do you have any advice that you frequently give your clients?
Our number one piece of advice that we give clients is consult your attorney.
Yeah.
We are not attorneys, but we are producing a document that often becomes a legal document. So we always recommend that people consult their attorney throughout the process. So when we take on a client, an individual client, individual trustee or conservator, we require them to have counsel. We require them to have somebody who is assisting them with their fiduciary responsibilities, because we cannot do that. Like I said, we're not attorneys. As we get to the end of an engagement, we will often contact the attorney or copy the attorney on the draft accounting so that they can review it. And we will remind our client that they need to have their counsel review it, that there are all kinds of notifications that need to go with the accounting, and we are not equipped to do that piece. So they really are relying on their counsel to review and distribute the accounting to the necessary parties. And I know sometimes people think, but the rates are less at fiduciary accounting. And so I don't want you to call my attorney, or I don't want to call my attorney. And in those cases, we encourage them to do it. We will copy the attorney and really make sure that it goes through the proper channel. And if it doesn't, then we need to have a deeper conversation.
Yeah, I'm sure it's much cheaper for an attorney to review the accounting your office prepares versus them having to review the accounting that an individual might prepare themselves, just because it's not going to even come in the same format.
Right.
So you have to dig around and find things. And you would have to, if we're reviewing something that an individual prepares, we have to review that against all the statements. Whereas, like an attorney typically knows you're not even going to start that accounting until you have everything you need.
Right.
So it's still cheaper probably, and just in terms of efficiency. What can people do in advance? So either as a part of their estate planning process or in managing their assets to make the accounting smoother for their successor trustee.
So again,
while you're alive, I should say.
Yeah. Well, I'm not an attorney.
Sure.
But I do see lots of situations. Most families don't need a fiduciary accounting, right? We are involved in situations because they have to report to the court or they're in some kind of dispute. So how to avoid the dispute, I think, is the best estate planning. And I have a few opinions on how that can be done. I'm sure that you, Madison, see it all when you're doing your administrations. But I would say the first thing is communication. The biggest issues are really around who's serving as trustee, right? So when the youngest of 4 gets chosen as the trustee, that brings back every, sort of 13-year-old argument that you had and don't understand why mom and dad picked a specific child to be the trustee. Um, all the childhood anger comes back. So making that clear at the outset or considering a professional fiduciary
Right.
can alleviate a lot of that. Uh, or worse, picking 2 of the 4 kids so that now you've got co-trustees to deal with and the argument as to who it is and who got chosen and who didn't. Um, the other thing I would say is that the other communication piece is really providing your beneficiaries with a roadmap of where everything is. So I know that there are lots of services out there to keep track of assets, to keep track of passwords, to keep track of, where you're filing your bank statements, where things might be found, what's in the safe deposit box.
Yeah.
All of those things are helpful because it allows the successor trustee to find that quickly and start the administration quickly. The costs really drive up when they are missing assets, when they find things later and have to extend the administration by 6 months or a year. And suddenly you have more legal costs, you have more filing fees, more, longer before distributions can be made. So
Fancy beneficiaries.
yes, exactly. And so providing that roadmap, I think, is really important um, to the beneficiaries. Um, and I would say, along with that roadmap is letting the beneficiaries know or giving them some clue as to the value of the trust or estate, because most children believe that their parents have more money than they do.
Sure.
And and therein lies some of the distrust when you're the child who's not chosen as trustee, or you are part of a blended family and you're not really sure who's in charge or who got what, or start making assumptions. So the more clarity around those issues in the estate planning process, the better, I think, for all involved.
Yeah, I can imagine if you find out your parents have, $1 million less than you thought, immediately they're like, who took that? Who stole that? And
Exactly.
they're going to blame their siblings. And, from our experience, it doesn't take much money to cause family drama.
Right. And it's like, the Monopoly card, their rich uncle leaves you money.
Yeah.
That doesn't happen very often. So,
No.
Usually it's family money that's being passed along, either to children or charities.
Yeah.
And I should also add the other thing that we see a lot, and I'd love your comments on this, is titling the assets in the trust. So many people, they put together a trust, they do their estate plan, and they never bother to go down to the bank and title the bank accounts or the brokerage accounts in the name of the trust. And worse, they put one child's name on with them. And so now they have a joint tenancy account. It is it is the first thing we have to deal with when we start an accounting is, what are the assets that we're accounting for? What's in the trust? And what do you tell your clients?
Yeah, so I feel like I can't hammer this home enough. All day, every day, just because we write your account name and my Bank of America checking account number 1234 on the last page of my trust on that Schedule A does not mean it's in your trust. You still have to go to the bank and retitle the account. Typically, attorneys, we do, I assume most attorneys do, will record the deed to your home or any real estate that you have. But in terms of your bank, I can't go to the bank for you. And so just telling us about it does not make it so. It has to be retitled. And the result, if that doesn't happen, is there's like 3 or 4 different options that it could be depending on your estate plan, and they typically all require some sort of accounting. So it is possible to end up with multiple accountings in one administration just because assets were not titled properly. So that's a big thing. Also, consolidate. If you have 45 bank accounts at 10 different institutions and I have to tell you have to go retitle your assets, no one's going to do that.
Right.
But if you're just going to one bank and you have a financial advisor that can retitle your brokerage account, it's a lot easier. So, it's a good time to, kind of simplify your life in that way and make things easier for your kids or whoever your successor trustee is. And yes. Heather, who's doing the accounting.
Exactly.
Yeah. So yeah, that retitling of the accounts, that is a big, or it's called funding your trust. And that is the retitling of the assets in the name of the trust to make things go smoother. So do you have any tips we kind of talked about that in terms of tips for people doing their estate plan to make it easier on the accounting. What about once somebody passes away or a trustee takes over, or whatever, an executor, whatever the situation might be? Is there anything at that point that they can do to make the accounting simpler?
Yeah, there are several things. One is that they should keep really good records, right? So if we talk to somebody who's doing an administration that's only 30 days old or 60 days old, that's the first thing we say is go get every bank statement as of date of death, because keeping those records is going to be a lifesaver in the long run, right? 6 months, 12 months down the road. And particularly if they do consolidate accounts, and I highly recommend consolidating accounts, but making sure that for those closed accounts, you have all of the bank records going back to when the account was closed. And from the beginning of the administration or the date of death through the closure date, because you will need those and they'll be harder to go back and get, because you won't have access online. They won't be available at the local branch. You will have to request them, potentially pay for them, becomes an extra step in the administration.
And those banks are not quick. They're not quick.
No, they are not. But I also, and I know a lot of attorneys recommend that a trustee keep a journal or a calendar, a notebook of all of the activities, because if you can imagine having maybe a probate administration that has 2 properties and you've been told to go sell them and they require fixing up, you are driving to meet realtors. You're driving to, you've got filing fees, you've got errands to do, you're hiring people to come in and clean it out, this and that and the other thing. Remembering that 6 months later, again, is going to be really difficult. So keeping track of those little activities that add up.
Yeah, especially if they're being allocated to something specific. Like if that one of those properties is going to a particular person and the other one's going to another person, you don't want to charge expenses to the wrong property.
Exactly. And you might want to be reimbursed for anything that you advanced. You've got to pay for parking. You've got to pay for whatever else whatever expenses come up during the administration. So yeah, there are quite a few kind of note taking or record keeping things that go beyond just the bank statements and the brokerage statements. And those also can include non-cash assets. So jewelry or artwork or, the baby grand piano, whatever it is, as the trustee, you're responsible for that. So keeping track of where that is, who has it, who took it, whether or not you're consigning it, all those things don't show up on a bank statement, but are important things to keep track of. And oftentimes the things that beneficiaries are most anxious about, right? They have an attachment to something. Yeah. So
it's even good when there's really not a value,
right?
But everybody holds a lot of, at least not one you can report on the accounting, but there's a lot of sentimental value. And so that's one of those tips that you could do while you're still alive in your estate plan.
That's
is
true.
have a plan for that personal property, because the accounting can result in a court having to do a court accounting if people can't agree. If you can't agree on the value of someone's precious moments collection, how are you going to get everyone to sign off on the accounting about who gets what with the personal property, you know?
Right.
Not to belittle that, but I don't think they have, you know, or Beanie Babies, whatever it is that the collection is that might have been worth something, that is really just sentimental value at this point.
Right. And the other two things I would say is on the administration front. One is we recommend that our clients not use a credit card.
Yeah.
Use the debit card.
Certainly not the decedent's credit card.
Don't use the decedent's credit card. Don't use your own credit card. There are no credit cards that are issued to trusts or estates. So every time you use a credit card, you're using your personal funds, and you have to get approval potentially for reimbursement, or you have to disclose your personal records to get the accounting done, to itemize those transactions. Most people don't want to do that.
And I'm sure the trust does not, or the beneficiaries don't want to pay the interest.
Right.
If you don't get reimbursed in, within 30 days.
Right. Right. And it becomes a big question mark on the accounting if there are, monthly transactions to pay American Express. At some point, someone's going to question, what are these expenses for? And so when we prepare an accounting, we will itemize all of those. But we've seen lots of instances where somebody doesn't want to disclose that information. They don't want to give us the statements for it, or they don't want to show the beneficiaries what else they're doing on their own personal credit card. So
I see that pretty commonly. They'll pay off mom's last credit card statement. Okay, I see that. That's normal, pay a few $100s.
Right.
But then they keep using it, and then I'm like, well, I need to know what that is.
Right.
Like, I can't just pay it to Chase, Visa card, like,
right.
Few $1,000s. Well, it's funeral expenses. Okay, well, show that to me.
Right.
It's not. And if it's your own personal one, then you're going to see all your personal transactions too.
Correct.
And so that's where they get stuck with that.
Yeah.
Although I don't obviously recommend using mom's credit card after she dies. That is bank fraud. So we don't want to encourage that.
Not recommended. Not recommended.
No.
And I think, Madison, I think you probably have other things that you tell your clients when they're taking on an administration.
Yeah, we do when it comes to securities. So stocks, bonds, mutual funds, maybe not bonds, but stocks and mutual funds. You might want to speak with your attorney or your financial advisor about a couple things. One, we typically advise for sure turning off dividend reinvestment. And so that is, if you own a share of Apple and you get a, $20 dividend, a lot of times if a dividend reinvestment is on, they take that $20 and buy whatever fractional share of Apple, and it just grows your shares. That is a pain on an accounting, because you have to show that on like 2 or 3 different schedules. So it's a lot more data entry. So you're still getting the income. It's just going into the cash reserve of the brokerage account. It's not being reinvested into more Apple. So we typically advise having that turned off on the account. That'll save you time and money on the accounting. And then you would want to check with maybe a financial advisor about liquidating those assets, because there are rules and fiduciary duties for trustees or agents in whatever way we're talking about an after-death administration regarding investments. So it's possible that you might want to liquidate everything, and then your liability goes away and you just have cash that's earning interest. But if the market takes a dive and you took too long for some reason, they can prove that you took too long. Now you have litigation on your hands. So
or some other like investment that is not a typical investment. We've seen people trading options, and that is not
Crypto.
Only is it complicated to account for, but it is also probably outside the bounds of your duties as the trustee. So
that we always when we have an administration, we provide a copy of the Uniform Prudent Investor Act. That's what binds all the agents. So that goes, certainly do not invest in crypto. We are or what are they called? ETFs, EFTs, those little, like a picture. It's like a digital file. It's just not anything. I mean, I don't even really understand
NFTs.
That.
Yeah.
Yes, NFT. Thank you. I'm like, I really don't understand what that is.
ETFs are okay though. Those are exchange.
Yeah,
those
that's
are fine.
Different. Yes, I knew it was an acronym in there. Yeah, so that is typically what we advise. I wouldn't necessarily say always liquidate. I mean, obviously it's going to depend on the day, the month, the year, what's going on, what it is. We always say, we can loop in the financial advisor. That's always a good idea. So then obviously the overarching goal is to be as organized as possible. I always tell people, just start sending me the statements as soon as you get them. As soon as you get an email saying the statement's ready, download it, email it to me, rather than me having to bug you about it and ask for 45 documents in 6 months. So do you have any particular recommendations to keeping clients to keep organized, or that is helpful to them, that you find is helpful to them?
Yeah. I think the organization is a challenge. I usually say 3 things. One is keep everything, right? So every statement, every check copy, take a photo of everything that you're depositing so that you know where it came from. Make sure that you've got, a complete set of records, invoices, receipts, whatever it is that you have. Even if you're throwing them in a shoebox, if everything's there, then an accounting can be prepared. The second thing I tell them is go through those statements, particularly the first 3 to 6 months of activity, and turn off all the automatic stuff. There's no reason to pay for Life Alert or Netflix or these other things that just add transactions to an accounting that really are not necessary. And at some point, someone will look at it and say, how come nobody's living in the house for a year and you've paid the cable bill every year or every month? Right. So go through those things and make sure that you've eliminated any unnecessary transactions. And the last thing is, don't be afraid to hire somebody. So taking on the role of trustee can be really daunting, and it can be a full-time job. And very few people at the end of the administration say, gee, I loved that. I can't wait to do that again. They usually say, I will never, ever, ever take on this job again. But, using somebody to come in and value tangible personal property and haul it away and put it on consignment, that takes a whole laundry list of things off of your plate. Hiring an organizer to come in and help clean out a house, that takes the burden off of the trustee. And making sure that you utilize, as I said earlier, utilize your counsel to make sure that, all of the basic steps that need to happen in the first 120 days of the administration have happened. So you can ultimately move on to terminating your own job as trustee, as opposed to having it drag on for years and years and years.
Yeah, and keep track of your time. Everyone's usually entitled to pay, to compensation for their job as trustee.
Yeah.
Sometimes documents say you can't, but I believe that's pretty arguable in court. I mean, you can't force someone to work for free. But yeah, you don't have to clean that house out that your parents have been in for 60 years. You do not have to do that by yourself.
Right.
And you may not want to do it with your siblings. So you certainly don't have to. So that's a good idea. And I keep picturing when you said put everything in the shoebox, when you see like in movies, it's tax time, people pull out the shoebox with a rubber band wrapped around it, just stuffed with receipts from the entire year.
That's right. And
we joke about that now because in an electronic age, it's a lot easier to deal with things. If I have to go pay for parking for somewhere, I just scan it on my phone, scan that receipt on my phone, throw it away, and it emails to the office or whatever. And we always joke because my husband always hands me the receipt in the car after we go somewhere, and I just ball it up, put it in the cup holder, and then he picks it up and puts it in the garbage can in the back seat. And I'm like, I don't even know why you gave it to me. You know I'm not going to do anything with it. So it's just the grocery store receipt or something like that, you know.
Right.
So keeping organized there's a lot of different ways now to help people get organized.
Yeah, and I think it really depends on what people are comfortable with, though, because yes, you are, you know, using your phone to scan and upload. Right. We have lots of clients who kind of, you know, we offer a secure portal that can upload information, but we have lots of clients who say, you know what, can I just bring it to you, or can I just put it in the mail to you? Because I have this box and I don't want to go through it.
Yeah. And we get that. People get very excited when I say, just come in and we'll scan it for you. And they get very excited about that. And I'm like, well, I'm not going to get it any faster if we need you to scan it or, you know, mail it or things like that. Just bring it in, we'll scan it, give it back to you. And that's part of that delegation, though. You can hire someone to do that for you. You can take that shoebox. If you're not, one of the things we run into is sometimes the kids or the trustee's not local. So doing that isn't an option, but you can walk that into a FedEx store, that shoebox, and have somebody scan that for you, and the trust can pay for that, you know, or whatever services that are out there, your local, you know, copy store type thing. So that's helpful too.
Yeah.
That doesn't mean do it and throw it away though. Just hold on to it.
Hold on.
Yeah. I like that. There's no such thing as too much information or too many statements or too many pages. We'd much rather have more than enough than not enough. Exactly. Trying to hunt down the missing item is usually very hard. We have that situation going on now where we requested statements and they had to request them from Bank of the West, which, as you know, is now BMO. And so that is very difficult, you know, and we got everything, but we're missing like 6 months worth of statements in the middle.
Yeah.
And
you could be waiting a while.
Yeah. It's already been 6 months. I mean, just to get the first set of documents and then to find out we're missing 6 statements in the middle, you know, that's tough. And now you have to go back and re-request it again. And, you know, it's tough, especially in the middle of a bank transition, which there's a lot more of these days. So that can make things more difficult.
Yeah. And it just like I said earlier, just adds time and cost to the administration, because now you've got to update by, you know, 6 months go by until you get those statements. Now you've got to update your accounting for the most recent 6 months, you know, while you were waiting. So, you know, I think sometimes clients feel like it's a kind of an endless process, but if we can gather the information at the beginning efficiently, it can move, the project itself can move more efficiently.
Yeah, and same with consolidating accounts in that way. I mean, if you have a trust account as successor trustee, you can, and it's got securities in it, you can still have a checking account attached to a brokerage account. And that way you still get one statement and it has all of those, you know, has all the securities and the money, the cash in there. So that there are definitely multiple ways to deal with that. So, and so other than hiring you, which we do, also, we do accountings. We also hire you to do accounting. Do you have any advice for people who need to prepare an accounting other than hiring you or an attorney to do that?
Yeah, a couple of things. One is, you know, there is sometimes a desire to do the accounting yourself, or if it's not demanded by the court, there's a desire to do a very informal accounting. And there is essentially a section of the probate code that says, here's the basic outline of what you need to provide in a trust. However, I always recommend that you do a formal accounting, whether we do it or your attorney does it, because there's no point in going back and doing it a second time if there is a discussion, a debate, and if somebody's asking for that information, I think there's a chance that they're asking because they think there's something that they need to question. And so that's a time to pick up the phone, talk to your attorney. It's also an opportunity to dive into a formal accounting, regardless of who prepares it. So I'm not a fan of the informal, and not something that we will do. So yeah.
I just feel like there's a very limited time and place for an informal accounting. Like there's just one checking account.
Right.
And you're basically just showing what's come in and out. You're just downloading the statements onto a spreadsheet, so to speak. But when it comes to anything that anybody can object to, the answer to the objection is going to be a court-approved accounting anyway. So you might as well just be ready to send it to the court. That's a very good way of putting it. And I'm just going to note, because I know you're not the attorney here, that anybody that's a trustee of someone's trust, you have that fiduciary duty, and you're liable for your acts as trustee. So if you prepare an accounting that starts a 3-year statute of limitations, per the code, it can be shortened to 180 days if that language is in the trust document. But it's only as to what you disclose. So that means whoever you give the trust to, the beneficiaries, let's say, they have 3 years to object to your accounting, saying that something's wrong with it, or 180 days if that language is provided. But that's only to what you've disclosed. So if you're missing something on that accounting, that statute of limitations never runs, and you're liable until you provide that information. So a good detailed accounting is really important. We don't do litigation, so I'm not into my clients getting sued for not providing information.
Yeah.
Because then we lose the client. So we have to send them to somebody else.
Yeah, and I think there is a comfort to individual trustees when it's not an insurance policy, but it comes pretty close by doing a formal accounting. I mean, it really shows that you've done everything that you can as a fiduciary to share the information and disclose everything. So
it's hard to object to that stuff. I mean, the trustee usually has a lot of leeway when it comes to that legal term, reasonable transactions on behalf of the trust. So it's hard to argue the transactions. But what it's easy to argue is that you didn't know about them. So having the trust, the accounting for the trust, pretty much eliminates that argument, which is usually the bigger argument than I forgot to turn off the Comcast auto pay or cancel the Comcast account, So I really appreciate your information, both as somebody who prepares accounting and has to deal with clients on a regular basis so I can help them be better prepared and be better trustees, but also so that people can learn and know that this is what's involved. And I think you mentioned how people get done being a trustee and they're like, gee, I never want to do that again. And that's where we've hit with our estate planning clients. We've now hit a generation of estate planning clients that have administered their parents' trust, and they have no desire to name their kids as trustees of their trust. They're like, I don't want to put them through that. So we're hitting that learning point where people have learned from their own experiences and don't want to pass that on. They're trying to break that cycle. So I think that'll be helpful for trust administrations in the long run. I'm going to check to see if we have any audience questions. I think I saw one. One was, why wouldn't you have your CPA do the accounting for you, or can you have your CPA do the accounting for you, or your accountant?
Yeah, you certainly can have your CPA do it, and there are CPAs out there who will prepare a fiduciary accounting. My recommendation is that you make sure that they have some familiarity with the probate code, because the requirements for a fiduciary accounting are very different than any tax accounting or tax preparation. There are a lot of rules associated with how the accounting is to be prepared and presented, and there are lots of local rules by county, and it's difficult for CPAs to keep up on those things. I would also say that in the accountings that we see that are prepared by CPAs, they're maybe not as detailed as they need to be, and that sometimes can cause an issue. But there are certainly CPAs out there who are well versed. There are law firms that are well versed, attorneys, paralegals, professional fiduciaries who prepare accountings. So there are resources out there.
Great. Thank you so much. I really appreciate you coming on and talking to us today, Heather.
Absolutely.
I know it sounds like a dry topic, but I love it. So it's
I love it too.
One of those things that you have to do in a trust and trust administration. And even though I feel like I scare everybody when I explain that on day one of a trust administration, I think that it's helpful to be as knowledgeable as you can. So I really appreciate it. Thank you for coming today, Heather.
Thank you. Thank you so much.
Thank you for joining us today for another episode of Absolute Trust Talk Live. If you enjoyed listening in, then don't forget to subscribe. You can find us on Apple Podcasts or wherever you may listen by searching Absolute Trust Talk. While you're there, we would also love for you to leave us a review. And then why not share your favorite episodes with family, friends, or colleagues too? You can find all of our shows and corresponding show notes by visiting absolutetrustcounsel.com. You'll also find a variety of other free resources, including our ebooks, videos, blogs, presentations, and more. If you need help with your estate planning or administration, we also offer a free discovery call to help get the process started. You can find more information on booking your session by visiting absolutetrustcounsel.com/scheduling. Don't forget to keep an eye out for our next live episode. If you join us for the broadcast, you can submit questions during the show. But if not, don't worry. You can always get in touch with us by sending a quick message to info@absolutetrustcounsel.com. Thanks again for listening. We'll see you soon.